So let's focus on Motherson Wiring now. It was a good set of numbers actually, a strong revenue growth, but the margins have contracted because of two reasons. One is higher raw material costs and the second is higher startup costs that they had to incur because of two new plants that are coming on stream, the greenfield plants. Their EV revenues have surged 50% year on year, and overall very good set of numbers. We have two gentlemen joining in, Mahender Chhabra, who's the CFO, and we have Anurag Gahlot, who's the COO of the company. Gentlemen, morning to both of you. Mahender, I want to start with you because the growth on the top line has been pretty good, 15%. Can you just take us through what are the demand trends now like, both in the domestic as well as in the export market overall? And particularly for domestic, what kind of reasonable growth can you see for the full year?
Yeah, sure. So thanks for getting us. So first of all, I think yes, there has been good revenue growth as you have highlighted, and it is mainly resulted by two factors. One is the industry growth. So if you look at the industry, the PV industry has grown by 6% in this quarter compared to previous year, the same quarter. And the second most important thing is the content. So if you look at people today, the customer, the final consumer is preferring high-end features in the cars, so which means more and more content. So if there are more features in the car, that means more content in terms of wiring harness, and which is a good sign for us, which gives us pretty good revenue growth in terms of revenue growth.
Okay, so you said industry growth has been 6%, but the content per vehicle is rising. So by the end of FY25, what kind of top line growth are you looking at, Mahender? And also this content per vehicle, right? How much can it rise to by the end of the year?
Yeah, so as far as year is concerned, I think we are positive about the industry, about the outlook. And if you look at most of the OEMs, they have already announced their expansion plans. Be it Maruti, Tata, or Mahindra, they have announced their expansion plans. So we are optimistic about the industry growth. And as far as content growth is concerned, we see this trend to continue. Consumer would keep on preferring the high-end features as far as PVs are concerned. So we see these trends to continue in terms of both the industry growth as well as the trend growth, the content.
Okay. Anurag, come in on this because, you know, the margins were impacted a little bit. There were, of course, startup costs because of your new greenfield plants, and also raw material costs have gone up. But now that copper prices are settling a bit, going forward, what kind of average margins can you do in the next couple of quarters?
Okay, first of all, thanks for inviting us on CNBC. Just would like to say, EBITDA or margins are not something we keep a focus on. Our main focus remains on the ROCE. And I think if you've seen the last year results, they were 48%. Prior to that, it was 44%. This year also, we are also on the track, backed by the customer plans. Now, coming on to the new plants, obviously, these two new plants are ramping up phase. One plant is in Q2 and Q3, and one is going to happen in Q4 and Q1 of FY26. So these cost, because you have to train the manpower, you have to hire them in advance, you have to skill them to start making or giving the output what you need in when the ramping up is happening. So these are the cost, and which is very much visible in the P&L account also. And as we move forward, I think as Mahender has also said that everybody is having increasing their capacities and investing into that. So we are seeing a good volume growth in the coming time. And I think, as I suggested, that our main focus remains on ROCE, and we are already in track on that.
No, I get that the focus on expanding the ROCE, but you are seeing some startup costs, right? Higher startup costs which are impacting your earnings. So I just want to know, going forward, can you give us a ballpark number? How much incremental startup costs are you looking at, and how much could that impact your EBITDA in the very near term?
See, if you have seen the Q1 results also, you will find the manpower cost is the one cost where you will find around 1.5% something was a high on the in terms of hiring these manpower. So these are the percentages, but it all depends on how much large business or how much large unit is going to ramp up, because both of these units are having a multi-customers and a multi-model are going to be launched at a different point in time. So giving a number as a straight away on something is a very difficult, because it's a spread of people hiring and getting them trained.
Okay, the EV industry growth has picked up a lot, and even for your own business, right? EV revenues have gone up quite a bit. Mr. Chhabra, I wanted your thoughts here. As a percentage of revenues, it's still a very small piece, about 5% for you now. But over the next, say, 2, 3, 4 quarters, how much can EVs pick up, and would that add to your content per vehicle further?
Yes. So first of all, yes, EV content is more in terms of wiring harness. The content in EV is more compared to ICE vehicles. As far as future is concerned, it largely depends on the market, largely depends on the customers. Because since we are supplied to the OEM, so if there is a more demand for the EVs, for sure our revenues should also increase in the same proportion or even better.
Okay, got that. Finally, then one word on the, you said the industry growth is coming at 6%, right? Would it stick to single-digit growth this year, Mahindra? Or is there a possibility of getting to double-digit growth for the industry in FY25?
So maybe I can request Anurag to take up that question.
Anurag, you want to take that?
Yes, surely. If you see that all the major OEMs in the country has already given their increasing their capacities. You talk about Maruti going from 2.3 million to around 4 million, and these other customer like Mahindra and Mahindra, or you talk about Tata. Everybody is given their details in last quarter and prior to that. So if you see the last year also, it has grown into single-digit percentage higher side. Q1 also says about the same. So we think that the trend remains the same, or even looks positive to us. As far as MSWIL is concerned, obviously we are growing by double digit, because obviously there's a content involved into that, and that one is the volume growth is there. So I think market looks to be very positive to us, and we see a good time coming forward.
Okay, good times coming forward, and the market is very positive. I would have asked about the balance sheet, but there is big improvement in the balance sheet. You're debt free as well, so there's no point talking about that. All the best, with the way forward. Just wanted one word from your end, Anurag, on the capex, right? Given that you have some legroom now, you have a cleaner balance sheet. Would you be at any point in time taking on some debt, any incremental capex that you're looking to put on board over and above these two plants? These two greenfield plants that are coming on board?
See, for this financial year, we have a capex of approximately 200 crores. And I think this is including of two things: the new upcoming plants as well as the maintenance of the plants which are existing. We have total 28 plants, including these two new plants. And you will hear that a few more plants are also in the pipeline, which you will hear from us in the coming time.
Okay, all right. We leave it there, gentlemen. Thank you both for joining us with that perspective. Appreciate it here on CNBC TV18. So that's Motherson Wiring with some outlook coming through for their business going forward.